The market's wrong. Like Bitcoin is massively undervalued right now. And again, reiterating what I'm saying, there is just so little Bitcoin out there. Every quarter, Tether is going to be buying Bitcoin. Every couple months, MicroStrategy is buying, Semler is buying, and we're going to see more.
On January 3rd, CEO Samson Missouri surprised even the most optimistic and super bullish Bitcoiners with his $1 million Omega candle price prediction for the leading cryptocurrency earlier this year, after the approval of several spot Bitcoin ETFs by the US Securities and Exchange Commission in January, and the subsequent unexpected demand from traditional institutional investors. Samson said he was certain that the unprecedented demand for Bitcoin, primarily through the ETFs, would spur an equally unprecedented price explosion. He predicted that we could see Bitcoin explode by tens of thousands of dollars in a single day as more traditional investors got aboard. While very successful in the early days, especially in March when the ETFs recorded billions in inflows that helped push Bitcoin's price above $73,000 for the first time in history, the demand for these ETFs has since slowed considerably, and the price gains are not coming as fast as people would like. Despite how rocky the past few months have been, Samson is insisting on his mega $1 million prediction for Bitcoin, which he says could still happen in 2024 or at most in 2025. In a recent discussion with CoinDesk, the Jan 3rd CEO highlighted several important factors that show just how massively undervalued Bitcoin is at the moment. These factors include macroeconomic conditions like the ballooning US debt, the general doom and gloom state of the global economy, and strengthening underlying Bitcoin fundamentals. Samson predicts that as these factors unravel further, contributing to higher prices for Bitcoin, the Omega candle prediction will get closer and closer until Bitcoin is trading at hundreds of thousands of dollars per coin. We will now bring you clips from the interview.
So I think it is important because it's an indicator of overall interest and demand. And what we've seen is the demand for stablecoins has just been going up and to the right nonstop. We're seeing more and more adoption, especially of USDT in global markets where they're quite dominant, and it's being used in LATAM and other markets as just digital dollars. They don't even call it a stablecoin. They don't call it Tether. They don't call it USDT. They just say digital dollar. So it's become ubiquitous, and I think that is a gateway into other assets like Bitcoin. So it's a good indicator of where Bitcoin is going, but it is going up all the time. And another parallel to that is Bitcoin hash rate. That's another indicator I think that is very important to watch. We're at 740 exahash now, which is all-time highs for Bitcoin hash rate. That's the power that's supporting the Bitcoin network. And that is a really good indicator of where things are going in terms of price, because usually it's a leading indicator and it dictates where price is going. And all-time high for hash rate usually will lead to an all-time high in price. And it's even more interesting to watch at this time because as the price is somewhat depressed, we're not at the all-time high for price, we're still seeing hash rate coming online, which indicates a very strong vote of confidence from entities that are mining, either corporate or nation state, that they're expecting Bitcoin prices to balance out the cost to produce Bitcoin through mining with the market price of Bitcoin.
All right, let's talk on the second point. Well, it's actually the third point you mentioned, but I'm going to mention it second. MicroStrategy, Michael Saylor, why are you watching? What's going on there?
Well, it's a very interesting thing because MicroStrategy usually pre-announces their contribution to Bitcoin demand. Like, we know that they're going to buy $2 billion worth of Bitcoin. And I guess credit also should go to Mara. They also pre-announced their buy. But I think that is a large spike in demand that we should be watching out for. And this is really why I believe the markets are irrational right now. You have a lot of fear permeating the market and in sentiment of investors and traders, I guess, that Bitcoin's price is going to go down for a number of reasons. But this is predicated on potential selling or macroeconomic factors. But it seems to be that they put very little weight into these obvious spikes in demand that are pre-announced well in advance. But speculation on potential selling and even a little bit of selling, like from Mt. Gox, can cause the market to be very jittery. But they just completely disregard this beacon of demand that is broadcasted out there from companies like MicroStrategy. For most Bitcoiners, I don't believe they are very fearful. I mean, opportunities to buy at lower prices is a godsend. And it's like you're happy both ways. You're happy when it goes up because obviously it's up, but you're also happy when it goes down because you're accumulating more Bitcoin and maybe lowering your cost basis for acquisition of Bitcoin. But the Bitcoin is a very interesting asset because it is a bearer asset. You can hold it yourself. The supply schedule is fixed, right? Every 4 years there's a halving, and it's like every 10 minutes there's a block. There's not that much to worry about if you're a hodler, or what we call people that hold Bitcoin. So you can kind of put it into cold storage, turn your phone off or your computer off, and just go travel and read books for a year and come back, and you'll see what happens. Like, the price probably will go up. But it differs from things like fiat money, where you have to pay attention. You have to be watching the Federal Reserve. You have to dial into the FOMC meetings and hang on to every word being said. If you're holding equities, you have to pay attention too. So I think it's a very different thing. And as people understand this interesting property of Bitcoin, that you just buy and hold it for long periods of time, more people will start to understand that the short-term price volatility is really a distraction. You're not buying Bitcoin for the gains in the next year. You're buying Bitcoin for the gains in 10, 20 years, which is almost guaranteed. Exactly. But going back to the sentiment, like the narratives I hear right now that are kind of just really exasperating are things like, well, rate cuts are coming. And suddenly now people have decided rate cuts are bearish because there could be a recession if there are rate cuts. But, just roll back the clock a couple of years, everyone was complaining about high rates, and there's very low liquidity in the marketplace because no one has money. So you can't have it both ways. Is it bearish or is it bullish? It's only one or the other. I think it has to be bullish because you're seeing more liquidity being injected into the system. Another one was, what was it again? That historically September is a red month. Bitcoin does not perform well. And there are reports in various news outlets and by various technical analysts saying, Bitcoin could drop 40%. But, we already had a big drop. I don't think you can just go back to analyze historical data and say it's going to happen again. We had a big drop. And the interesting thing about that big drop was the massive influx of buying that came when Bitcoin went to the low 50s. That was when the US market opened. So the yen carry trade blew up. Japanese market, Asian markets were tanking. And then the moment that the US market opened, you just see Bitcoin rebounding. And I think that goes to show that there is strong demand, especially from the ETFs, where they're relatively price insensitive. And that also applies to Bitcoin being sort of recession proof, because you have large pools of institutional capital that have nothing else to do. So in a recession, I think ordinary people, retail investors, probably are going to have a hard time. But we are seeing pension funds with hundreds of billions of dollars invest in Bitcoin. And that doesn't really change in a recession. They still need to meet their obligations and deliver to the pensioners. And it's the same for every other major institutional investor. They're sitting on piles and piles of cash, and they're going to do something with that. And it's likely that they will put it into Bitcoin. At least that's the trend I'm seeing. Yeah, so I think I hear that commentary a lot. Like, why are we at Jan3 working with nation states to implement Bitcoin strategies when you don't want them to have it? But first, a nation state adopting Bitcoin is literally the separation of money and state. It's a voluntary separation. And I think that is a good path to pursue and to advocate for. It reduces the power of the state. It separates the ability to print money out of thin air from the state by them adopting Bitcoin. The second point I would make to that is it is a good thing for price insensitive investors like nation states to get into Bitcoin, because they effectively have unlimited funds to print money with. Like, they can print money. So if they want Bitcoin, I think that starts to solve some of that problem. It alleviates some societal problems too. When we inevitably rebase to a Bitcoin standard, if they start sooner rather than later, then it's easier to onboard hundreds of millions of people and billions of people into a Bitcoin standard. But the key thing is, like, they will be buyers of Bitcoin once they understand that Bitcoin is valuable and they want it. So that money will just flow into Bitcoin. There's just no accountability. At least with institutional funds, they technically need to get the money from people that invest into them and then deploy it. But a nation state can just turn on a fire hose and inject money into Bitcoin. But also that applies to mining as well. I think nation states mining are also going to be less price sensitive compared to, I don't know, more corporate company level miners, which might need to sell Bitcoin to pay power bills. But most energy companies are state owned. And if you see the merger between mining Bitcoin and energy, they do need a base load consumption or usage of the base load. So as it becomes one and the same, that a energy company is a Bitcoin mining company, you'll see less volatility in the market because they're not needing to sell Bitcoin. They're just mining Bitcoin because they have excess energy. But there's definitely a comparison. If you look at ordinary people, they want to buy Bitcoin when it's at all-time highs. They're not interested when we're down in the 50s, right? And it's the same thing. Like everyone gets Bitcoin at the price they deserve. But we do have a lot of interesting conversations going on. The challenge is for us working on nation-state adoption is that we have to work with the governments, and there's a lot of turnover, and there are a lot of challenges internally to work with these governments. Sometimes we make a lot of headway, and the government's overthrown, and we have to start from zero. So it's a process. It's not like walking into Walmart to buy a toaster. I don't think it really changes the way I look at Bitcoin. I just look at it and I think it's incredible that we're sitting where we're at today and we're not above 100,000 just because of all the market conditions. And I think it just has to do with people being unaware of the key properties of Bitcoin, why you want Bitcoin, and the incredible scarcity of Bitcoin. But it is changing because we haven't done any big announcements, but we have been meeting with politicians and regulators throughout the world this year, and we are telling them these things. And usually at the end of those meetings, you see a light behind their eyes, like they're thinking about it now that we've laid it out flat for them on the table, and they're seeing that okay, there's not a lot left. And if we wait for, say, the strategic Bitcoin reserve, if Trump wins, well, you're going to get the same thing. You're going to have the US with the lion's share of Bitcoin, and you'll be lucky if you have 100, right? At that point, it'll be the exact same scenario as the ETF. So I think we just have to keep on working and pushing that. And hopefully we get a second El Salvador this year. I'm hoping it will be Argentina personally.
Check out the link below. $30,000 deposit bonus in Bybit. And if you buy and spend coins, check Nexo Exchange, and I'll see you in the next one.